Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. Thank you very much for listening. Thanks for tuning in. You know, we're on Apple Podcasts. We're on a number of the different podcasts which are nationally known. They're Big Eight. Isn't that what they call them, Daryl? The Big Eight?
Yeah, exactly.
Exactly. Okay, so if you're out there and you're listening to us on a podcast, we're also on 4 different radio stations, so we're really happy that you're listening. We're also on Google Music Play and a number of other outlets. If you go there, please sign up for our particular show. And if you do sign up, leave a review, because if you leave a review, it just allows other people to be able to see and hear what you see and hear. And I think it's important, especially now in the days of the coronavirus and what's happening, to be informed and to be informed by the best people out there in the business, which I must say, because there's only 4 or 5 shows of us, we're among the top 4 or 5. So if you're listening, thank you very much for listening. Also, we're on YouTube. This show, as well as many others, are on YouTube. Although we are working out some kinks, this week's show will not be on YouTube other than audio if we can get it. I don't know. Can we get it on audio, you think? How does it work?
Yeah, we're going to add some still images to it, and it'll be on definitely be on YouTube.
Okay, excellent. So when we work out the kinks, because most of us are staying home, most of us are adhering to the governor of California's desire to keep everybody distanced from one another, and my understanding is that there's only 16 or 17 states that are currently doing what we're doing here in California, but we're wanting to keep safe, we're wanting to keep people healthy, and that's the most important thing. As I said, we are on YouTube. Jeff Barton, the Mortgage Voice. You can go there. That's our channel, and see this and many other shows. The solutions to what you're looking for today, tomorrow, and next week in terms of both funding your loans, the information you're going to need about submitting loans, how to get in touch with your particular loan officers. All of these things are sort of in flux for those of us that are separated like this, and to become aware of it, understand it, but also have solutions by which you know that we've vetted and we're also implementing in the system. Okay, welcome everybody, and thanks again for listening to the show. I'm Jeff Barton, and my engineer, producer, Daryl is always there with us, and we're trying to work this thing out long distance. So let's talk a little bit about what is going on in the mortgage marketplace, because the things that worked last week are not working this week. First of all, let's talk programs. Some of the programs at the lenders called non-QM, non-qualified mortgage, and we've talked about what a non-qualified mortgage is and the volume of non-qualified mortgages, which were vast up until 3 days ago. 3 days ago, what happened? As you all know, Wall Street, where a lot of investors have really taken it, has probably dropped 30%, 35%. Wouldn't you say that's what it is, Daryl?
Yeah, and what surprises me is last time this happened on a major scale, they were able to slow down or hit the brakes or stop trading for a period of time to give people time to not be psychotic. And I haven't heard about that this time.
Yeah, they have been doing that. You know, they're what they call, they're not called breaks, but let's for all intents and purposes call them breaks, whereby if a certain amount of trading on the negative hits, I think it's 500-point loss, they halt trading for 15 minutes to give everybody a chance. Because again, another thing we've talked about on the show, the reason the stock market does what it does, a lot of it is automated trading, which is done in nanoseconds. It used to be, of course, in days gone by, that you had to call in an order or you had to place an order with your broker in order to have these things happen. So it took time. So on the upside, there was a problem because people couldn't make money fast enough until the rest of the market caught up if you wanted to get your order in quickly. Well, nowadays, on the downside, these orders happen at what they call stop gaps. And if you know anything about, I guess it's short trading, or there's if you're playing long in the market. Now, these are terms that we use, meaning that if you think the market's going up, you're playing long. If you think the market's going down, you're playing short. So if, in fact, a number is hit on a stock market or on a group of stocks in an index fund, which is below or above where that trigger is, that's an automatic trade, and that happens really quickly. So if you're talking billions and billions of shares being traded in a nanosecond at the same time when a particular marker is hit, well, that's going to make the stock market fall so rapidly it's almost impossible to stop it. So therefore, back in '08, when this all happened at that time, they put in these stopgap measures, 15 minutes halted, and it's supposed to give everybody a chance to breathe. But as you well know, when the market drops 1,300 points in a day or 2,000 points in another day, now again, it can go up on the upside. But what happens when a lender, like a Malibu Funding, let's just take Malibu Funding. Now, Malibu's funding sources for cash. Where does it come from? Where does the money come from? Our money doesn't come from stock market money, but a lot of funds, a lot of hedge funds, a lot of insurance funds, a lot of excess funds in the trading world end up in mortgages, either through a lender, and you pick a lender, pick any of them, not the big banks, not Wells Fargo, not B of A, not Chase, not any of these large big box banks, but if they come from smaller but large mortgage lenders, Quicken Loans, for instance, United Wholesale Mortgage. These are not banks. These are lenders who get their money from several different sources, a lot of them tied to Wall Street. So what will happen in a situation whereby that money, because of the drop in the stock market, is less or lessened by a lot, by 50%, by 80%? What you're going to see the guidelines, or I guess the amount of money that you need on your loan to fund for your refinance or your house. You may see the underwriting get slower. You may see a drop in the time or an extended period with which they need to fund your loan. Now, for United Wholesale and Quicken, that's not a problem. These are huge. The number one, the number two, or the number three, and the number four lenders in the U.S., mortgage lenders in the U.S., and they have billions of dollars at their disposal, and their particular funds are not at risk. Some of them may be, but because they have a lot of different warehouse lines, the issue here is not in liquidity. But for smaller lenders, Malibu Funding being one of them, those particular funds are not that plentiful. Let's say a Malibu Funding has a $20 million limit, which in the lending world is a small company, and that's a monthly limit. So what happens within that sphere, within that scope of lending money, those people, Malibu Funding or any number of other lenders out there, maybe you have your lender with a lender down the street that you haven't heard of. I'm not going to name a lot of names because I think it's not a good idea to start doing that. So I'll just use me and the biggest ones in the industry. My particular setup, my particular way of doing business, we don't rely on those type of funds, but we do rely on other kinds of funds. And this process by which the mortgage industry is funded is one that is, I hate to say it, but it's liquid, meaning that if those liquid funds dry up, those loans can't be done. And the whole non-QM sector is now out of business, meaning that most of the funds, or if not all of the funds, for the non-QM sector, your bank statement loans, your stated income loans, loans that are with 90% LTV, bank statements only, a lot of the business type loans that are out there are no longer able to be funded because those sources for those funds have dried up because the stock market itself has dropped a gazillion points over the last week and a half. So what we need here is to understand that, and to also understand that the financial underpinnings of what brings the stock market up and down have zero to do with the mortgage on your home or the value of your home. What it has to do with is the availability of funds for the mortgage on that home. And that's what the key point is here. And we're going to get into a little bit more of that later on. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Really appreciate you listening this week, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your host and voice in the mortgage industry. Thank you very much for listening, and thank you every time you do check in. We are on Apple Podcasts, a number of other great podcasts out there. We're under the Big 8 podcast. We're really happy that we're getting a lot of great feedback, and we appreciate your feedback. If you go, please join what we do, and if you do that, leave a nice review, because when you leave a nice review, people want to come and listen to us. If you leave a lousy review, nobody's going to want to. I'm just kidding. Thank you very much for listening to the show. Again, I'm Jeff Barton. If you want to hear us each and every week, go to YouTube. YouTube has our show. It's Jeff Barton, The Mortgage Voice. That's our channel, and we're on each and every week. If you do listen on YouTube, join. And when you do join, click on the little bell, and you'll get notification each and every week about our show or new shows that are coming up. And we are trying to expand our portfolio of shows, although it's been a little bit difficult because of the coronavirus. And I wanted to talk to some of our leading and best people in the Malibu Funding. Malibu Funding hosts the show each week and pays for the show each week, and I appreciate what they do. One of those people is Bill Orr, one of the talented loan officers for Malibu Funding. Bill, how are you?
I'm doing great, Jeff. How are you today?
I'm okay. Thank you very much. I can hear a little stress in your voice. What's happening with you in the lending business?
Not really so much stress. I just wanted to make sure you could hear me. Well, it's busy. I was thinking before we spoke about what would people listen to the show want to hear. There's been a lot of turmoil, but the bottom line is, if you want to buy a house or refinance a house with an FHA loan or a conventional loan or things like that, lenders still open. We're doing a great job. Interest rates are still low, and we can still help them buy a house. What's really taken a beating, Jeff, as I'm sure you know, but for the listeners, there's a whole market that's always been there in the mortgage industry, where for people who, for any one of a number of reasons, perhaps can't document their income, and those people are typically self-employed or the salespeople and things like that. So there's a whole myriad and a whole segment of the mortgage industry who service just those type of clients. Well, those loan companies, those mortgage banks, those loan programs have all ceased operations pretty much as of yesterday. There was 3 lenders that suspended operations yesterday, and those are the last 3 I was working with. So that's for the smallest segment of the population who needs to get their income verified via bank statements or an employment verification instead of turning over paychecks and W-2s. That will probably be a halt for 30 or 45 days. I'm hoping they'll continue on after that. But for the vast majority of people, Fannie Mae is still here, Freddie Mac is still here, FHA is still here. We're still funding loans. We're still getting great deals for people, and we're here to help these people any way they can.
Hey, Bill, I have a question for you. On funding loans themselves, I know back in 2008 and 2009, one of the difficulties was you never were quite sure if the lender that was being chosen to do loans had the money, because the stock market was up and down, and all the assets that the lender were using in order to either hedge against losses or actually dip into for funds is at risk. How are they dealing with that today?
Well, from what I've seen happening in Wall Street, is they're doing all these programs right now. I believe it was 2 or 3 days ago, they reintroduced quantitative easing. They have, I think it's whoever the Federal Reserve Chairman is now. I want to say Bernanke, but I'm just showing my age. They're open. They're starting an unlimited bond buying program. So that's what our money comes from. It comes from mortgage bonds. And if the federal government has an open-ended policy to basically buy every mortgage bond out there, that means the funds are still that means the funds are still available. So There may be a small mom and pop mortgage bank here and there that might see some difficult times, but for all the lenders that, at least for Malibu Funding works with, we do work with some of the biggest mortgage banks out there. Now, these are typically not the retail banks that we see, Bank of America, Wells Fargo, that kind of a thing. Those banks have checking and savings and car loans and credit cards and that kind of a thing, and they also do mortgages too. The types of banks that Malibu Funding deals with, and a lot of mortgage industry professionals, are just strictly mortgage banks. That's all they do is mortgage.
Right.
And for the most of the big ones that we're aligned with, everybody is ready and open and ready for business and actively helping our clients.
Let me ask you another question in terms of the validity that what we're hearing from the federal government is that we're trying to get back to work now. I'm just confused because obviously the state of California is issued this stay-at-home order, and do you think that's confusing to both the financial markets as well as a mortgage? Somebody wants to get a mortgage is told to stay home, but at the same time they're told to get back to work.
I think it's nonsensical. I'm going to try really hard here to not go into politics because we just want to talk about mortgages here, but I think anybody with a small degree of common sense can fully realize that I'm not sure that's the right thing to do for the health of the country. I have seen the argument that we need people returning back to work to keep the economy going, and I understand that. I think what will happen within a couple of weeks, from what I'm seeing, is people who have the coronavirus and have recovered from it, for the most part, they're not going to be able to catch it again. So therefore, they're not cured, of course, but they build up enough immune system in their body where they no longer have it, and therefore they're immune to it. That's not to say they might not catch it again a year, 2 years from now, because we just don't know that. But in the immediate future, they're going to be safe to go back to work, and there's certainly something to be said for that. But from my feeling is right now, I don't necessarily subscribe to that philosophy. I think there's going to be a lot more worse things to come before people can go back to work, but that's just me.
Yeah, and the reason I asked was because from a borrower standpoint, from somebody who's selling a house, it's very unsettling anyway to get into a negotiation back and forth and then trying to figure out whether the availability of funds, assurances aside, Treasury or the Fed buying all the mortgage-backed securities, just anything that's going to unsettle a deal, especially a purchase deal where you have a contract and it's supposed to be 30, 45 days. In regards to that, what are you saying to real estate brokers in terms of the timing?
Well, what I'm saying is that the clients I have is that their loans are secured, and in fact, what we did to secure them was we yesterday I spent a good portion of my day locking all of my clients' rate. When you start a loan, your loan isn't necessarily automatically locked. You submit the file, and sometimes you float with the market in hopes that the rates will get better. And therefore, you can take advantage of the lower rate during the escrow process. But at times like this, I'm telling people we are locking their loans to secure their rate ahead of any future market deterioration. Therefore, their loans are safe, and the clients that we're working with, the banks, I should say, the investment banks that we're working with, are all well funded, and they're funding loans. And from what I can see so far, the Fannie Mae, Freddie Mac, and FHA loans are all funding, and I haven't seen any banks go by the wayside on funding those type of loans.
Hey, Bill, I appreciate your calmness in talking about very difficult stuff. Could you shout out your phone number for people so they can get in touch with you, especially if they're nervous and they want to check in if they can get a loan?
Yeah, that'd be great. Area code 818, or first let me give you my name. My name is Bill, and my last name is Orr, O-R-R, Bill Orr. My phone number is 818-406-4744. That's 818-406-4744.
Okay. Hey, thanks very much, Bill, for coming on the show. And let's catch up in the next couple of days, see what's going on.
Yeah, anybody can shoot me a text if they just want to get an update. I'm happy to do what I can to help out. Thanks so much, Jeff. I appreciate your time.
And thank you, too. That's Bill Orr from Malibu Funding. Great loan officer. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. And if you listen to us each and every week, you know we're on podcasts. We're on Apple Podcasts. You can go to Google Music Play, wherever fine podcasts are heard. If you do go to these terrific places to hear the show, make sure that you join Malibu Funding, the Mortgage Voice, and make sure when you do that, you leave us a review. Because when you leave us a review, it helps other people find the show. Also, if you go to YouTube, I'm doing this without script, everybody. So, okay, so if you go to YouTube, The Mortgage Voice, Jeff Barton, The Mortgage Voice, you can see our channel. And when you do see our channel, make sure that you join. Click on the little bell that gives you an update every time we have a new show that's airing. And we have one airing each and every week, so our information is current. The shows will be, like I say, each and every week, and we do appreciate when you do that. www.themortgagevoice.com is our website, and if you go there each and every week, you can also catch what we're doing in Malibu Funding, the great company that does sponsor this show and helps me each and every week by sponsoring what we do for the information that we provide to you. With us today, once again, is Connie Hernandez, who will help us to kind of figure out what's going on with the coronavirus, whether loans are funding, and a bunch of other questions. Connie, how are you?
I'm doing great, Jeff. I'm very happy to be part of Malibu. Let me tell you, things are a little bit crazy up there, but I know that I'm in a good place. And we, to answer your question, we are funding our loans. We're having a lot of our vendors, like our AMC companies, our people are really stepping up to the plate and it's really helping us get these loans through in a difficult time.
I see. So what challenges do you think are going to come up? I mean, I know that the non-QM sector is pretty much, non-existent.
As far as the non-QM sector, I don't really think that that's going away. I think that it's kind of on a pause mode. I guess that's the best way I can describe my personal opinion on it. It's just too big of a sector to just disappear overnight. And I feel right now it's just everybody's a little bit frightened about what's going on, obviously, with the market. And I think giving it a little time and seeing if they can figure out a way to allow those industries to work that don't have constant contact with the public, I think that would be a great thing for everyone. Obviously, I believe that we all should be cautious in the environment that we're having to work in, but I do know that just like our industry, we can mobilize ourselves to become remote. And with the technology that we're working with, and you see, the internet, the emails, there's Zoom meetings, there's just all this technology available to so many different businesses. It's just a matter of changing your mindset, making the changes necessary, and keeping our employees safe, keeping ourselves safe. And I think it's going to take a little time, a little adjustment. I'm sure that all of us expected this to be over a lot sooner. But, I think as we understand what we have to do, not just for the immediate future, but also for possibly long term, I think that there are options.
What we do in the mortgage business, and most of the professionals I talk to today, are trying to assure or reassure their borrowers that we are okay, we'll get through it, and we'll, most importantly, be able to fund their loans. What are you telling your borrowers?
Well, as I mentioned when we first came on this, I have to be extremely grateful to be part of Malibu. And I really emphasize that because I know that there are other lenders out there that are struggling, that are to a point of potentially, shutting down, closing up. But within Malibu, if you find the right lender that has strong relationships and still has the ability to fund and take care of the borrowers, and, you know, kind of almost like we've gone through this before, Jeff, and I think that as long as we have a little bit of foresight on our end and do what we need to expedite things quickly and efficiently, I think we can get past this. Most of my borrowers have not had any difficulty funding their loans, and I'm talking both about refis and purchases. Obviously, purchases are still taking a bit of a priority. The refi clients are being a bit patient, but I am closing my loans, and the resources that Malibu has have all, like I mentioned, they've all stepped up to the plate. They're willing to spend extra hours to make sure our loans get funded. Our escrows, our ANC companies, they're all pretty much there, available to help us get through this.
Now, you're dealing with real estate a lot, right? First of all, what percentage of your business is real estate purchase loans versus refinance?
Well, you know, it shifts on occasion. Right now, I'm obviously, because it's a big refi boom. On a normal market, I would say most of my business does come from the real estate, arena. More. I basically have probably, I would call it on a ratio. I would call it about 65% of my business comes from purchases, and on a normal refi market, 40-30% of my markets are refis. But right now, obviously, that's kind of taking a turn where most of my business is coming from the refis, and it's slowed down a little bit on the real estate side. Obviously, because some of the recent changes also is heavily impacting us.
You know, we've come through some difficult times during the last 10 years, let's say 10 years. It goes back further because with 9/11, there was a whole different set of issues and problems. But we, as an industry, you and I, as individual brokers, being through these times whereby assurance or trying to make sure that people can rely upon us, is it different today than it was, say, back in 2007, 8, and 9?
No, it's very similar. It just has a different top cap on it. Very, very similar. You would say sailing through the industry, probably a bit of uncertainty, but I think us as professionals and being in direct communication with the funding sources and the vendors, it's up to us to give our borrowers the sense of confidence that we can accomplish and help them get through this, both with their purchases and their refis.
Do you think it's going to be 2 weeks, 2 months, or the rest of the year?
That's a really tough question to answer. It really depends on whether or not they decide, I think, whether it's safe enough to allow some of the industries to go back to work.
Could you just give me a number? Do you think it's going to be sooner or later?
Well, if they allow some of the businesses to reopen, obviously under restrictions or changes within how they do business or conduct business, I think that we could see an end to it sooner. If there's, a long-term situation where we're kind of forced to work from home and maybe some industries aren't capable of doing that, then I think this is going to be longer than what we would hope.
Well, Connie, I really appreciate you coming on the show on such short notice today. We have a lot of things in the industry that we're trying to deal with, and certainly assurance, experience, having been through it before, really gives a leg up to you and to a lot of people who work solidly for their borrowers. I really appreciate you coming on the show. And would you mind telling people how they can get in touch with you over there in Covina?
Well, thank you, Jeff. I appreciate you having me on the show, and I apologize a little bit. I'm on the road right now, so I'm not exactly sure if I'm coming through okay, but I definitely appreciate the time. And our office is in the city of Covina, 101 North Citrus. We can be reached at area code 626-422-4592. We're happy to answer anybody's concerns or questions as far as what they see there, or with their computers moving, we're here to help.
Okay, great, excellent. I appreciate it, Connie. Thanks very much, and we'll talk to you soon.
Okay, thanks.
Thank you. That's Connie Hernandez from PMA on Jeff Barton with the Mortgage Voice, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thank you very much for listening to the show. If you want to hear us, you can hear us on Apple Podcasts. Also, if you want to see us on YouTube, you can do that. You can go to YouTube, The Mortgage Voice, Jeff Barton, The Mortgage Voice. That's our YouTube channel. If you go there, join our group. Click on the little bell and you'll get notified every time a new show comes up. Really appreciate it if you do that. Also, www.themortgagevoice.com. You can see us each and every week. There are a lot of things happening within the scope of the lending industry, as well as different cities around the country and how different cities are handling the coronavirus, what we're doing to try to make sure that there's available funds in the market. There are also investors, and people in the investment community which need to communicate directly through our platform here to make sure that people understand what's going on. One of those great people is from WealthWave, is Terrell Robinson, Big Tex. Tex, how you doing?
Hey, Jeff, how you doing? How you doing, man? Great seeing you. It's been a while.
It's been a while, and thank you very much. I really appreciate what you do on Facebook, on all the social media platforms, especially during a time like this.
Absolutely, absolutely. Thank you very much. We knew this was going to happen because it's been up. Market's been up for 10 years, which is unheard of in the last century. And we knew a correction had to come. Right now, Las Vegas is a ghost town. I was supposed to be in Cincinnati today, couldn't fly out today. And, of course, I'm not going to even put my family in that type of danger to even fly out. But in regards to one of the things I can say, I've always told my clients, I'm not going to be the person, I'm not going to promise you a 50% return or 100% return. But the one thing that I can promise you is that you won't lose any money in a downturn market or coronavirus. So it's been 3 years now to date that I haven't had one client lose 1 penny in the market because of the way that I do their finances. So that's what's been happening. Been quite busy because people are now calling saying either thank you or I need help because my counterpart has done something with you. Now, in regards to Vegas, they have now some places you have to put a sticker in your car. If you're out working, you cannot be out driving around. They will warn you the first time. The second time, it's a felony now.
A felony. For driving around.
Just telling everybody, hey, unless you're going to the store or the pharmacy and back, but if if I'm just want to go to my office and ramble around in some papers and stuff like that, I can get pulled over and get cited for that now. So a buddy of mine called me this morning. He had to put his ticket in his window to show that his job requires, he puts in all the filters for all the casinos in Las Vegas. They have to change the filters every 90 days. So he has to have that sticker in his window.
I see. So essential businesses in Vegas may be a little bit different than essential businesses out here in California where I am and some of the listeners where they are. What are some of the other exempt businesses? I thought financial people were exempt. That's not true?
No. Well, the only thing with us is we're all working from home. Some guys are trying to sneak in and go into the office, but it doesn't make any sense. I'm doing a Zoom webinar with all my clients, handling clients from all over. So we're doing a Zoom webinar. So people can see each other still. And as you notice, the stock is going up because of it. So I'm doing a Zoom webinar with clients. But, yeah, they most definitely want us to stay home.
Now, the stock market, let's talk about that. A lot of funds for mortgages come through the stock market, either one way or the other. We see the yo-yo effect of what the coronavirus has done. Where do you see it heading?
Well, we're not at the bottom yet. So I tell people right now, if you have a traditional 401k account, people now, this coronavirus has exposed a lot of people and a lot of businesses. And what I mean by that, even some of the clients I've sat down with that didn't want to show me all their portfolio, because I always stress having 3-6 months of emergency fund.
Right.
Now it's exposed a lot of people because now they're waiting on a stimulus check.
Right.
Here's another thing. These big companies, I have a call with a big company in a couple of days. If you're a big XYZ company producing millions of dollars each year, the first thing on your mind, you should have at least a year set aside.
Right.
And if you don't, if you need a bailout within 30 days, there's a problem. So that's been exposed. A lot of people have been exposed, and I'm glad they have, because America is ranked number 17 in financial literacy. We need to get back. The bottom hasn't happened yet. I see about a couple more weeks, and it'll start ticking back up, and then people need to make sure that they get back into their 401ks. But most definitely, make sure you press pause on your 401ks for right now. The money that comes out of that check, put that in your savings account. Build your emergency fund up, and then when the market goes back up, turn right back on your 401k.
You know, the financial literacy, I really appreciate what you started to do, I don't know, several years ago when you made a switch from what you were doing to what you're currently doing and helping clients through a number of different vehicles. Can you mention a couple of those now? I know that some of them I know about, but maybe the people listening don't.
Well, one of the vehicles that I use for retirement for someone that's 25, 30, well, actually children all the way up to the age of 55 is called an Index Universal Life, and I only deal with one specific company. As a matter of fact, Kobe Bryant is with that company too as well, so his family's taken care of. The reason I use that account is because it has a zero floor, so you now have a retirement vehicle that you can put unlimited money in, never be affected by the market, and you pay no taxes when you get ready to take out the distributions.
It's an excellent way to explain what the first part of what you're explaining is to the listening audience. When you say this is universal life, there's zero floor, what do you actually mean? What does that mean?
So meaning that if the market were to take a shift and go negative, so let's say the S&P 500 were to go negative minus 10% or minus 1, which it has, that means the client, whatever the client principal is, they're locked in. So if the client starts out with $0 and they build it up to $10,000, the market takes a 20% dive, the client still has $1,000 in that account. It locks in their gains in their principal. Unlike a traditional retirement account, it doesn't. It has an unlimited bottom. The Index Universal has a zero floor.
Tell a little bit more about what the product is, how someone would get in touch with you if they wanted this kind of protection, and what you see about the future going forward with this kind of product.
Absolutely. They can contact me at 702 area code 882-2103. Taryll, TARYLL.Robinson@wealthwave.com. And depending on their age, we can sit down and run a number of various of things for them. And if they have some old retirement money, especially old retirement money, when they get close to them to retire, there's ways to get out of that hit. Even if they're 59 and a half and they're still at that employer, they can move their funds over and just start a newer 401k account. Now their funds will have a zero floor. We give them a 10% bonus just for moving over and a guaranteed 10% on the income for the next decade. So their money, if they move over $100,000 without putting any more, I know it's going to turn into $210,000 a decade from now.
Taryll, thanks very much. Great last minute. You stepped right up and knocked it out of the park once again. I appreciate the information, especially in a time like now. I do. Thank you very much.
Absolutely. Hey, I appreciate you. Seriously. Thank you.
Thank you, too. And that's Taryll Robinson from WealthWave, and I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks very much for tuning in. We are on Apple Podcasts. We are on all the major podcasts. If you want to listen to the show, you can go to these podcasts or listen to the 4 great radio stations that we're currently on here in the Inland Empire. And hi, everybody out to San Bernardino and Riverside counties, as well as up into Lake Tahoe area, thank you very much for listening. And our new affiliate out in Las Vegas, Nevada. We come to you from, today is from my home. Tomorrow or next week, we're not quite sure. The business is in flux, and we are certainly in flux as well. So if you are available to listen to the show in any of these ways, that's great. You can also go to YouTube and hear us there, see the show as well. Go to www.youtube.com and look up Jeff Barton, the Mortgage Voice. That's our channel. This, as well as many other shows, are there. We will keep you informed as to what's happening in the mortgage market. There are a lot of different changes and a lot of different, challenges right now. Earlier segment of the show, we talked about non-QM and what the difficulty of funding non-QM loans and why. Non-QM loans, which represent 30% of the market, are currently almost out of business. There are a couple of lenders left, and we'll see exactly where that is. And the whys of that are the availability of funds. And most of the funds and where the funds came from have been diluted simply because the stock market crashed 30%. I mean, that's just what it is. So anybody who has money and was what they call hedging. So if you lend money, you want to have an insurance policy. That's called a hedge. And however you derive that insurance policy, whether it's investing in real estate, whether you invest in the stock market, which gives you a certain amount of a certain amount of, insurance in the fact that if you do this and you lose money over here, you won't lose money totally. A lot of the stock brokers do this when they sell short and buy long. This is the kind of craziness of the market we're in right now. But as you can see, it's evolving. Now, did we go through this before recently? Yes, we did. And when we did go through this before, what happened? What happened in those days, and I'm talking about 2007, 2008, the market really was about the loans that were terrible. This market is not about loans that are terrible. This market is about a virus, a pandemic that has attacked both the citizens of our country, but most of the world. And we have federal responses which have shut down a lot of businesses, and state responses which has really shuttered most essential, traffic between people, which again is why I'm home. I was at the studio recording. Makes it difficult for people to conduct business in a normal setting. That's the difference between then and now. The bottom line is, can we fund your loan today? Can Malibu Funding find a broker or a lender, if we do brokered loans, to fund your loans today? Well, Fannie Mae and Freddie Mac and Ginnie Mae products, FHA, conventional, VA, USDA, and reverse mortgages are all fine. Why? Because they're federally backed. They are part of the overall Fed solution, and I want to get into what those Fed solutions are right now. The Fed solutions, in order to keep funding loans, in order to make sure that you can get your refi, because I know if you're not working, you want that refi. How's it going to work if I'm not working and I've got to prove the ability to repay? What do I do? So the Fed has come out with some guidelines. Let me read what that particular guideline is. The verification of employment. Fannie Mae and Freddie Mac came out with guidelines today that allow for more flexibility and alternatives in verifying employment for customers whose workplaces are temporarily closed. Okay, so your lender has these guidelines. And what does that say to a lender? What does that say to you? Freddie Mac, Fannie Mae, Ginnie Mae, FHA conventional are being purchased by these quasi-governmental institutions. These big behemoths are going to continue to buy the loans. What does that mean to your lender? What it means is that the lender can lend you money, and you can be assured that the lender can sell those loans to those entities. Therefore, the money that's needed for your loan is going to be okay, because those particular institutions buying your loans from your lender means that the funding sources for your loan can continue to fund loans because they know that Fannie and Freddie is going to buy. That's one of the things that the federal government is doing through Fannie and Freddie, to make sure that the housing market does not freeze up. As you remember the last time, in 2007, 8, 9, the money seized up, and everybody wanted to keep their cash because they were unsure as to what was going to happen with the mortgages already out there in the marketplace. If you thought that the mortgages that you did last year or this year or yesterday were going to be in trouble because the employment was going to be lost, this tells you by the guidelines and by the fact that Freddie, Fannie, and Ginnie are all continuing to purchase loans, it tells you that that liquidity issue, the funding sources, is not going to end. And that's really important, especially now when we're looking at solutions to try to see where we're going and what's happening in the marketplace when it comes to buying and selling of your loan. Purchase loans will continue to be funded. So you're buying a house, and you've qualified under a certain type of program that is a Fannie Mae, a Freddie Mac, or a Ginnie Mae product. You're worried now because you just got laid off, or you were told, take 2 weeks, go home, and come back. We can't pay you, but we will be able to hire you back. Well, you're not alone. There's a lot of people in that same situation. However, I know the pressure you're under, and I know the fact that because of the fact that you are under the pressure to be able to purchase that house, yet you don't have a job, you don't know what to do. The guidelines that your lenders have that were sent out from Freddie Mac will give you an opportunity through your lender to discuss exactly what the solution is. My own personal opinion would be that if your employer could write a letter and tell your lender that you will be hired back at the same salary as soon as the state allows everyone to come back to work, that would be sufficient for Freddie Mac and Fannie Mae to buy the loan from the lender. Now, I believe that these particular guidelines coming from Freddie and Fannie and Ginnie through your lender will allow you to purchase that house. The questions of future employment are being dealt with, and the fact that you will have your job through this letter that will be verified by your lender, much the same as the verification of employment is done today. The verification of employment today is done through your employer and a form which the employer fills out to be able to inform the lender that you are working and this is what you are. It's not unlike what they have is somebody getting out of school today. Let's say you're a professional and you're getting out of school and you've got the promise of a job when you finish school. You can use the promise letter as a way by which you can qualify for a mortgage. You may not have known that, but that is a mechanism in place currently. And some of these professions which get out of college and they have terrific income, whether it be an engineer, a doctor, a lawyer, a nurse, there's so many different professions that come out of college instantly into a good paying job. The instant we find any new information about how loans are being funded or if these guidelines change. Now, that's the one thing that we cannot predict. But I do think that both Ginnie, Fannie, and Freddie are the institutions behind purchasing the loans from your lender. And as long as that continues, and I believe it will continue, we should be okay in terms of those conventional and FHA loans. I'm Jeff Barton. I'm your voice for the mortgage industry. Thanks very much for listening, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net, funding.net, 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 funding.net.